Ladies and gentlemen, in this week's video, I'm going to examine for you what I am doing with respect to my positions in DBS Bank, OCBC and UOB Bank. Now, unlike most other commentators, when they comment, they may not have positions. But for us, when we actually pick a good idea, that's where we invest millions to make millions. And that's where the perspective that we are coming from. As you are aware, in GCP Global, we only actually cater to the high net worth individuals, the family offices, and the index funds. And so these are the people that bet millions, and because they follow us and watch us, essentially they also make millions with us. So in this week's video, I'm going to show you essentially what am I doing on my Singapore Bank's portfolio. So as usual, do like us and give us a thumbs up and do subscribe to our video, or even better still, come for our class on the 8th of February so that you can be enlightened on the latest investment idea. Ladies and gentlemen, this is the latest report among analysts' conviction about Singapore banks. As usual, most of them will tend to extrapolate linearly what the banks have done in the last couple of years into this particular year. And not surprisingly, most of them are actually positive. Am I doing, and do I actually share this opinion? This is what I'm going to explore in this video. First, look at this chart, ladies and gentlemen. In the last 5 years, you can see that DBS Bank, as actually shown by the red line, has actually gone up 85%. OCBC has actually gone up 53%. So what have I done? Because in 5 years ago, we actually held our banking class, and this was, all the Singapore banks were our recommended buys. And, I think many of us have actually benefited substantially from it. Now, first and foremost, let me show you, my stake in OCBC Bank. Yes, ladies and gentlemen, this is my CDP statement. I blanked out the rest of my other holdings, but in my latest CDP statement, my OCBC Bank, I have 77,385 shares. So if you look at 16.57, the market price, my portfolio is worth 1.3 million. Yes, I know. Last Friday, OCBC closed at 17.10. So actually that value is even higher, more than 1.3 million. So if you work backwards based on the 50% gained in the last 5 years, my cost is about 750,000. I've made close to slightly more than $500,000 in the course of the last 5 years. So if you ask me what I'm going to do, look at OCBC. Well, just on last year's performance, the share price went from under 13 to 17.10 for a 31% gain. The current valuation for OCBC Bank is actually single-digit PE at a price to book of 1.15. Now, if you compare this to DBS Bank, DBS Bank actually went up from $30 to $44 just last year for a gain of 47% in a single year. Now, in my opinion, essentially, I think that's a little bit too much because of a few things. DBS Bank, that I'm a little bit cautious, is that, surprisingly, with the earnings, the 3Q numbers that came out, the management indicated that one of the uses of the excess capital that they have is possibility of buying back shares. I'm like, wow, I almost fell off my chair. Why, ladies and gentlemen? That's because in CFA and normal accounting, when you have price to book value of almost 2 times, in this case for DBS Bank is 1.75, approaching 1.8. Buying back shares above book value is never a good idea because it's dilutive, not accretive. That's point number 1. And later on, I'll share with you essentially most of the market forecast you can see is actually looking at positive, compared to last year's projected earnings. Now, granted that the 4Q numbers is going to come out after Chinese New Year, but generally most people or most analysts, most forecasts in the market is still looking for a positive. But it's actually this year, 2025 numbers that is actually and can set some setbacks, and this is one of the rare forecasts that I see. This came from UBS, and it says that they expect that revenue for 2025 will drop from 21.9 billion in 2024 to 21.7 billion this year. So on the net earnings, the reported 10.9 is expected to drop to 10.2. Now, this is one of the rare forecasts that actually look at a decline in the net profit for DBS for this current year. That's 2025, the new year that we're talking about. And I actually support this. And I reckon that essentially, based on UBS estimation, the price to book value based on UBS estimation is about 1.9. It's really, really expensive for the stock. So what I have been doing? Well, as the stock actually inched up in the last couple of months, when it crossed the $44 level, that's where I've been leveling off and taking off my profits. After all, as you can see from this particular chart, it's gone like almost 100%. So that's the first reason why I am taking off some of my profits from DBS. The second, of course, is that my holdings in DBS compared to my OCBC, as you know, OCBC I own 77,385 shares. The same similar amount of shares, 77,000 in DBS, would actually be worth much more. So essentially, when it comes to asset allocation, the fact that essentially if a security, like in this case, DBS has outbid OCBC and UOB, then of course, I'm actually taking that money off the table so that I can reinvest elsewhere. Now, I'm going to touch later on where do I invest my profit. So you may ask, ladies and gentlemen, and this is something that I think practically very little research report as I've seen from the market actually points this out. One is actually the underlying profitability of DBS Bank last year was astronomical simply because of the fact that the trading income jumped on a year-to-year basis by 25%. The second aspect is the fee income jumped 32%. That's principally because of wealth management. Now, I reckon that this year, the wealth management will continue to do well, but maybe not as well as compared to last year. But what is interesting is, ladies and gentlemen, is the trading income up 25%. Now, ladies and gentlemen, I was lucky in the sense that I hit a couple of financial houses, equities trading, before I made a lot of money and retired in my early 40s. Right now, let me tell you that when it comes to trading income, you can make a lot of money as what DBS traders have shown, but let me tell you, a new year that actually sets the tone for trading back to zero. So your trading book is actually back to zero. You are still looking at interest rates. Last year was an easy call because interest rates hit a peak of 5.5% in the US, and that's actually trend downwards. Now, if you bet on the 10-year bond yield, you can actually do straddle policies, you can do the butterfly spread, so on and so forth, be it equities, bonds, or Forex. So from a trading perspective, let me tell you that when it comes to a trader's luck and the ability to repeat your trading performance is not that easy. So I'm not betting on that happening on DBS or many of the other banks. While I must concede that trading could still be profitable and should be profitable, otherwise you should be attending GCP Global Investment classes because we give you all the profitable trades. Then, but don't expect to repeat year on, year in on the same magnitude basis. It's going to be very, very difficult. Taking off slowly my profits in DBS, you ask me essentially what do I do with the profits? Well, first and foremost, let's look at this table. This table clearly shows you, as what we have been sharing with you in our past videos, follow the money. And for the last 15 years or 16 years since I left the industry, you can see this is a very interesting chart because it actually coincides from the year when I left the industry in 2009, the best performing market since then, is the US market, up 600%. In my last few videos, you can see, ladies and gentlemen, as well as the things I have shared at GCP Global Investment classes, is that, since I left the industry in Singapore, I told you not to bet on Singapore stocks. This is another reason why Singaporeans, and by far and large, most people shun local stocks because essentially there aren't market-beating stocks, and essentially, the numbers show, clearly, even India, which has performed well the last 2 years, ranks almost 400% behind S&P, as you can see from this particular table. So in terms of ranking, that's where it will go. So that's where I will be putting my money in the cybersecurity stock in the US now. So whether it's going to be Palo Alto, which actually does and do a lot of firewalls, end-to-end encryption, cybersecurity services, or CrowdStrike that actually does a lot of cyber in the cloud security purposes, or network securities guys like, for example, Zscaler or Fortinet. This is something that and I think, this year will do well in the US, and that's why we're going to cover it in our class. So on a class on 8th of February, hopefully you can join us, ladies and gentlemen, and do sign up at GCP Global website. You can see, and enjoy the Chinese New Year special prize. We're going to talk about a few things on US cybersecurity sector. Why am I positioning it? 2 tremendous opportunities for profit positioning. Understand, remember when we make a lot of money on Singapore Bank, that was because we positioned well. Not only just positioned well, but positioned big more than 5 years ago, and that's why we're ripping returns. For example, my other stake in UOB, I didn't show you in here, is because, it's parked under one of my private bank. We have also amassed, close to a 75% return. So you put in 2 million, the profit now is almost another 1.75 million. That's the kind of return that we're looking for. We're looking at drivers of earnings growth in the cybersecurity sector, and we're looking at relentless cyber attacks. As you can see, ladies and gentlemen, there are close to 1,600 cyber attacks on a single week on US corporations. And guess what, ladies and gentlemen? The cybersecurity companies will be profitable. As they say, these are the kind of cyber attacks that actually bring business to the likes of Palo Alto, CrowdStrike, Zscaler, Fortinet. And this is the kind of stuff that we're going to cover on our 8th of February class. And guess what? Google tried to buy Wiz, which is an Israelite company, for $23 billion. When this company dealing in cybersecurity has even made $1 billion in terms of revenue. So price to sales of 23 times is unheard of, ladies and gentlemen. This deal did not go through last year, because WIZ, preferred to lease this year on the IPO market. So you can see there is a lot of MAs happening in the cybersecurity sector. That's why it's gotten me very, very excited. So position for the next 5 years, that's what we're looking for, to make tremendous amount of profit. So if you are in it and you're looking for big profits, do join us for our class. Till then, Happy New Year.